What's up, guys? Welcome back to another day trading video, and today we're going to get into it simply, quick and fast. Today we're going to go into order blocks. Now, I did show a video of how to spot these order blocks, and I already made this video before breaking down order blocks on the board. For some reason the video didn't want to upload, so this is actually remaking of another video, but it doesn't matter because I'm going to show you how to break down an order block, how to understand it. All right, so let's get into it quick. First, we have to understand what is an order block. It's quite simple, all right? Its order block is simply a price zone where large orders has been filled. So those large institutional orders, those large bank orders, where the bank who has trillions of dollars, the institutional traders, trade with, like I said, millions, billions of dollars. So they place a zone where those large orders are being placed, all right? So where do you find this? You find this in the leg down or up prior to the break of structure. What does that mean? We must use the break of structure, must be used with the break of structure. So we find the break of structure first, and then we spot the leg up or down to find that zone where large orders have been filled. So what does that mean? Those large orders are going to be retraced, are going to go back to that zone, back to that zone. Oh, yeah. So, and that's how we use it. So when it goes back into that zone, we enter a sell position or a buy position. And I'm going to show you exactly how it looks and how those priors look as well. Also must be used with liquidity sweep and used with liquidity sweep. So finding liquidity sweep, that is liquidity has been swept, then finding a break of structure, and then that's where you use your order block, all right? Or fair value gap, whatever, order block, fair value gap, retracement tools to help you find where the stock or the price is going to go back into that price and to fall or go right back up to the price where you want it to go so you can enter a win. All right, so let's break it down right now. All right, so let's break down an order block with a bullish order block and a bearish order block, how it's supposed to look on the charts, and I'm going to show it to you on the board. All right, so let's get started with the bullish order block. Like I said, we need a break of structure and liquidity sweep so we can find that order block or zone where large orders have been filled, where we can retrace and then go back up or go back down. How do we find that? Let's see right now. First, there's a liquidity sweep, all right? That big move down, calling that liquidity sweep. Then we see a downtrend formed by lower lows and lower highs. Lower low, lower low, lower high, lower high. Then we see that break of structure right over here. What does that mean? A lower low, then a higher high has been formed. But that can't happen in a downtrend. A downtrend only is formed by lower lows and lower highs. But we see a higher high, so that means a break of structure, okay? Then we just find the leg down to find that order block. We find the leg down. Where's that leg down? Right over here after the break of structure. All right, so break of structure, that leg down, leg up, higher high. All right, it may seem confusing. So let me try to break it down one more time. The leg down of the break of structure. What happens? That zone, that whole leg, so it can be formed by multiple red candles or just one red candle. When a break of structure happens and you see that leg down, price tends to go back into that area or that order block or that zone. Then what happens? Rips right back up, forming an uptrend with higher highs and higher lows. So that is a bullish order block. Now let's get into a bearish order block. We see a liquidity sweep right over here. What happens? Price taps that liquidity sweep right there. We see an uptrend formed by higher highs and higher lows. Higher high, higher high, higher high, higher low, higher low, higher low. All right. What happens? A lower low is formed. Forgot to put it right there. A lower low is formed, but we can't have a lower low in an uptrend. So that is a break of structure. We are now forming a downtrend. All right. So we look for the leg up to find that zone where large orders are going to be placed and go right back down. All right. So we have that break of structure because this was a higher low, but now it formed a lower low. Like I said, break of structure. So we look for the leg up price usually tends to go back into this area. What happens? It slams right back down. All right. So break of structure, liquidity sweep that leg up, so you can find what price will go into that zone and go right back down. So for a bearish order block, look for that leg up. All right. It's the reverse. Bearish, you want to look for the leg up. For a bullish, you want to look for the leg down. And remember, it must be found with a liquidity sweep and a break of structure. So when you find that break of structure, look for that leg down prior to the break of structure. Not this leg, not this leg, not this leg, or not this leg. Those are not order blocks. The leg down of the break of structure. So for this one, not this leg up, not this leg up, or not this leg up, or even not this leg up. Leg down, break of structure, and that leg up right over here. And that is how you exactly want to find a order block, bearish or bullish, on the charts. All right, so that is how you look for on the board. And if you want to look for on the charts, you'll check out my video. I already posted it. Like I said, I don't know what went wrong. I didn't want to post it. I already made the video already, but it doesn't matter. That is showing you how to do order blocks. And that is it for today's video, guys. If you like the video, please like, comment, subscribe. Please share with all your friends. Please grow the channel. And I will see you guys in the next video. Peace.